I think it makes sense to continue to own high quality companies in the portfolio. I don't know whether tech's going to outperform this month or next month relative to value in cyclicals. But what I do know is that it's important as an investor to, continue to have exposure to what are secular growth stories in technology, whether it's Visa, which is way outside of the social media fold and really has nothing to do with what we're seeing regarding regulation and bans, or whether it's Google, that's a little bit closer to that sphere with YouTube and controlling content on YouTube, which is important. We think that these companies with high returns on capital and that are leaders in their space still make sense. You don't have to have all of your portfolio in technology. 100% exposure doesn't make sense, but continuing to have these investments for 2, 3, and 5 year time horizons, we think is wise for investors.
All right, Jason, we want to continue to talk about investing in tech, but now we also want to bring in Alex Kantrowitz, founder of Big Technology and also a CNBC contributor. It's hard to talk about big tech without talking about social media right now, Alex. Thanks for being here. Your recent newsletter kind of spelled out the rise of what many people call far-right leaning apps like Parler, another one that I'd actually never heard of called Gab. In a sentence or two, could you kind of just break down what all of us should know about these apps?
Right. So I think that's something that we really need to pay attention to is what happens when the big social media companies like Facebook and Twitter start banning folks. And that is that they don't just, leave the internet. They go elsewhere. And they're finding their way to these free speech social networks, places like Gab, places like Parler. Parler is now offline, but Gab is still online, which basically their strategy is we're not going to moderate as a policy. So there are no content guardrails there. And that's where a lot of this activity, stuff like the QAnon, and some have said even planning of the storming of the Capitol have taken place inside these alternate, free speech social networks like Parler and Gab. And they're worth paying attention to because, my big thing here is that history doesn't end with a ban on Twitter.
So, Jason, I'm going to turn things back over to you. Alphabet, Google, Amazon, and other big name companies, Facebook, Twitter, obviously as well, they've decided that there are some guardrails. And it doesn't seem that investors agree with that. Do you see that being a long-term take for investors? Because those stocks, they closed down pretty sharply yesterday.
Yeah, I think this too shall pass, just like the regulatory risks that we've seen over the past couple of years where, Alphabet, i.e. Google, had a big target on its back. Google was at all-time highest prior to yesterday's dip. So, I think certainly over the short run, these are things that investors pay attention to and indeed traders get nervous about. But at the end of the day, the tailwinds behind the backs of these large technology companies that are by and large outside of the Twitter ban fold that certainly aren't playing in the Parler and Gab space. I mean, sure, Amazon cut off the computing power to Parler, over the last couple of days. I don't think that's going to impact Amazon's story in e-commerce and cloud. I will say that these large technology companies that we prefer, whether it's a Visa or a Microsoft or an Amazon or a Google, et cetera, the really defining feature of all these companies is that they're taking friction out of the systems in which they operate, the industries in which they operate. And that's encouraging non-linear type behavior. For example, with Amazon and e-commerce, I don't know about you guys, but I see a lot more boxes on my doorstep over the last 5 years and indeed during this pandemic. So it's encouraging us to shop more with Amazon because they're making it so easy. So I think when you own companies like that and technologies that are innovative like that, good things happen over the long term.
Yeah, Jason, boxes, those pouches with the bubble wrap, even just plastic. I think we're all ordering a lot more online.
So much of it.
Alex, I want to turn things back over to you. Obviously, the president, he's been kicked off of Twitter, but he was a really big attraction for social media sites. How does a Twitter, a Facebook, and these other sites, how do they make up for the attention that someone like the president or even some of these so-called far-right groups can garner?
Yeah, I think they're going to be just fine. One of the things about, a company like Twitter or a company like Facebook is they either give you real-time information or they help you connect with your friends and family. And just because one user isn't on the service anymore doesn't mean the demand for real-time information in Twitter's case or connecting with friends and family in Facebook's case is gone. So, early on when Donald Trump was, making a lot of noise on Twitter in his candidacy in the early stages of his presidency, I did some research and actually found that he wasn't making a major difference in terms of usage on the platform. So think about the news cycle more and less about a newsmaker. And I expect these companies to be able to navigate the potential loss of engagement from the absence of Donald Trump pretty easily.
Alex, interesting insight there that the president's presence on Twitter doesn't really increase usage, even though he had about 89 million followers. Jason, I'm going to give you the last word. While maybe the president doesn't increase usage of a Twitter or Facebook, banning him certainly had an impact on the stocks. And while you don't foresee that lasting a long time, is there a way to hedge some of the things that we've seen through an ETF or some other way?
I'm not sure there's a way to hedge any kind of bumps in these stocks, but there are certainly ways to get exposure to a broader technology theme that not only avoids some of the pitfalls of, banning and free speech and, one party versus another. And that's, again, owning companies that, regardless of what one's view on regulation may be, have strong enough tailwinds at their backs that they're just continuing to grow their earnings and cash flows and revenues at a pace that's much faster than the market. I mean, if you look at these large cap technology companies that we own, we also own an ETF called W Cloud. It's Wisdom Tree's cloud ETF that has a collection of 50 or so mid cap cloud and cybersecurity work from home stocks that we think, is a nice theme for the next few years. I think there are ways to get exposure to technology where you don't have these kind of potential problems with a Twitter. We used to own Twitter. I think it's a great platform. I use it a lot, but I agree with Alex. I don't think just because Donald Trump is not tweeting, that's really going to impact their business model.
Shepard Smith here. Thanks for watching CNBC on YouTube.